Okay, I've got the target, it got some measured moves, and it has a 2-bar reversal, possible final flag. The bulls will probably try to get that trading range at least one more time. They'll probably try to get 86.25 at least one more time. The move up from 38 is pretty strong. So I think the odds are that we'll go sideways and have another attempt up. I think 49 is a bad-looking breakout pullback long. So I definitely wouldn't buy up there. As far as shorting it, I don't know. We're up strong enough so that I think we'll go sideways in here, and the bottom of the trading range might be the 44 or 45 low. So for the time being, I'd rather look for longs. 50 is also a second entry short, for the test down to the 44 low. Possible trend reversal based on the final flag, and second attempt to reverse the earlier 12 high of the day on a day that's probably a trading range day. For the shorts, 51 is a decent looking bar, but again, no follow through. 52. You could argue that this is a wedge bull flag, 3 pushes down, 48, 51, and 53. But to me, I'm bothered by the bear bars that are accumulating. 48 and then 51 in particular. So I would look for more. I would look to see if it gives me a wedge bull flag to buy. Okay, the market tried to push up, hit the trading range again, one tick above the open of the month, so it's in the resistance area. Bear inside bar, arguably double top bear flag. So I think it might be an okay short. I didn't take it. I was hoping to get a wedge long, but instead the bears won out. 58 could have been a very strong bear breakout, but it has that big tail. 59 is a good bear breakout, but the close is so close to the low of 58 that the bar after 59 will probably overlap 58. So there won't be a really good measuring gap, and that to me makes the short weak in here. I think the market is always in short. 58 is a breakout, 59 is follow through, but it's not behaving well. 60 overlapped with 58, so that's not good for the bears. You want to have a measuring gap in there, and then you get the big tail on the bottom. It's testing the breakout above 39. It's testing the lower trading range. Instead of just collapsing into it, it's stalling, it's slowing down. Smaller body, another tail in 61. So we may be forming a wedge, a micro wedge here. And 62 completed the micro wedge, 3 little tails down, even though 62 is not lower. The market should bounce here, not necessarily reverse. The bulls might argue that this is 2 legs down, 52, 61. I think always in is down at this point, but the bulls didn't care. They tried to break out to the upside on 66, but the big tail on the top, that's a real problem for the bulls. Decent follow through on 67. The market might be always in long here with the 66 breakout. I think the bulls will try to buy a breakout pullback, so I'm looking to buy below bars. 2-bar reversal at 68, arguably another lower high, so arguably another short. I wouldn't take it after 5 up bars. So to me, I'm looking to buy below the 2-bar reversal. We'll have my initial stop. I think I put my initial stop below 64, but I don't remember, which was about 2 points. I placed a limit order to buy at 83 and again at 82. Here's the breakout pullback long setup above 69, but it's not a very strong looking bar. The bulls got up to a new high, but a weak close on the 71 breakout. So this might be the 2-legged move up in a trading range. 72 could have traded below 71, and it did not. The bulls were able to hold it up. They tried to pop it up on 73, and instead it went outside down. So it could be a lower high and a 1-bar final flag and a sell-off. So the attempt at forming a head and shoulders bottom bull flag with 53, 61, and 69 looks like it's failing. Head and shoulders bottoms, normally if the market falls below the right shoulder, it finds a whole bunch of shorts because that is usually where the worst case stops are, and that's what happened on 75. The market had a large bear reversal bar, so the market may be flipping to always in short. Decent follow through on 76, so it probably is always in short, but it may also be finding support at 61 near the top of the lower trading range. The bulls tried to have a huge bull reversal bar, but it had a terrible close, and it was followed by a bear inside bar for a low or breakout pullback short. I didn't take it, but it was a huge bear bar. I think 110,000, no, 150,000 contracts traded, or almost 150,000 contracts traded on 79. So that's a huge amount of conviction going into the close. So the final bars of the day, they dumped very, very heavy. Normally, if you start getting 150,000, 200,000 contracts on a bar, you get significant follow. This is also more evidence for the bears. Let me take a look at questions. By the way, I did not take that many in-mini trades today. I felt like I didn't take that many, but when I went back and I just counted a little while ago, I ended up taking 8 trades. Normally I take 10 to 15, but I felt like I was a little bit timid today. I think I was nervous because of the early price action, the trading range price action. However, in general, I'll say what I sometimes say: if the market's going up and you have a good-looking bull bar, you can buy above it. So, for example, buying above 9 would be okay. Buying above 26 is okay. I thought buying above 18 and 22 was not okay. Buying above, I think 38 was not great. Buying above 40 is better. Buying above 45 was probably okay. I was concerned about buying above 52 because of that bear bar. And that was it for the longs. As far as the shorts go, if the market is going down, shorting below bear bars is okay. In the first half of the day, after the market flipped always in long on that spike up from bar 9, I didn't think there were any really good-looking short setups. Arguably, shorting below 48 is okay, and the signal, because of the final flag, you could have shorted below 49. Usually, once I see it set up like 50, I place a stop order below the 2-bar reversal, and even if the market trades up and then hits the stop 2 or 3 bars later, I'll take it. I was concerned by the amount of bull bars going up, and I was concerned about the open of the month, today being the last day of the month. And I do think the market paid a lot of attention to 86 1/4 today, so I was probably a little bit extra cautious because of the 1186 1/4 and how the market might respond to it. Anyway, the inside bar at 57 arguably is an okay lower high, at least for a scalp, turned into an always in down. I would not have shorted below 68, the 2-bar reversal. As I said, if anything, I would buy it, and I did. And as far as shorting below 73, it probably would have been okay, but at that point, I was pretty exhausted, and I was done trading for the day. As far as shorting below 78, it was a really good-looking bar, but I was too tired. As far as buying spikes or entering on spikes, I think buying the close of 10 was probably okay. Buying the close of 11 probably was okay. But on 11, because of the size of the bar, I scalped out the entire position at 4 ticks. On the spike up, I think buying the close of 43 is okay. But the bar was big enough and it closed near enough to its high that I thought there would be at least a scalp up. On the way down, this was tricky. I think shorting the close of 59 was probably okay. On the way up over here, I would have preferred a better looking breakout bar in 66, but I did buy the close for a scalp. On the way down, I was concerned that the bears were really strong on 75, However, at this point, I was done trading it for the day. If that was earlier in the day, I probably would have shorted the close of 74, 75, and again 76.